All right, guys, if I had $1 for every time either a client or someone in the comments had asked me, how do you get a HELOC on an investment property right now, I would be a wealthy man and probably wouldn't need to buy any more rental property or even have the need to use HELOCs anymore. But I have found you guys someone who is still allowing HELOCs on investment properties. And today I want to talk to you guys all about that and provide you everything you need to know to get started or to see if you would be a good candidate for this product. Now, I'll first just come out and say, guys, this isn't the perfect product. It's not a magical silver bullet that's going to work perfectly for everyone. In fact, it's got a lot of things in it that I'm not super happy with, and I wish it were a lot different. But right now, there's not a whole lot on the market. And so as the famous saying goes, in the land of the blind, the one-eyed man is king, or said otherwise, you beggars can't be choosers right now. If you're able to make this work and you're able to get a couple deals done with it until things open back up, then hey, I mean, that's a win all day in my book. And this product doesn't have any of the major red flags that I advise you guys to watch out for. So I thought it would still be of value to share with you guys today, at least let you know what your options are, even if they're not good. Hey, let's at least talk about what they are and acknowledge that someone out there is doing this. First, let's start out with some of the good news here. So this is a product endorsed by David Green. If you're not familiar, he's a huge Keller Williams agent. Also, you likely know him from the Bigger Pockets podcast. He took over for Brandon Turner, but he's actually the founder of the brokerage who sponsors these products, a huge investor himself. So guys, even if this specific product doesn't work for you when you call and check it out now, I advise you to check in frequently. He's let it be known that he's actively looking for more banks that are willing to open this product up. And as the economic environment starts to improve its outlook, he's going to continue to push the lever and see if we can get some of these kind of cons, if you will, associated with this product removed or open up the doors or the floodgates a little wider. So I would recommend you set a reminder in your phone to give them a call, hey, once a month, once a quarter at least, to say, hey, has anything changed with this product? Last time you told me X, now is that still the case? Because guys, this is an ever evolving environment. But without further ado, let's talk about what this product is, the HELOC that's still open for investment properties. So a big pro in my mind, and something you is very rare to find, is that this product is actually a fixed rate. So fixed rate HELOCs are very uncommon. And if you find them, I always advise that you pay special attention to that factor. Now, that's not a decision maker in and of itself, but it can be very helpful in predicting and projecting out project cost and what you're going to be paying on this. And so the range that they gave me was between 8 to 12%, depending on your credit score. So that's really not uncommon with where the overall interest rates are right now, hovering around the 6% for a primary first position mortgage. Hey, 2 points higher than that is pretty standard at the 8% low end. And if you have shady credit, hey, unfortunately, this is one of those scenarios where you're going to pay for it. So while you're working on that, it's not too bad. And as always, I just advise whatever rate is available for you to get the funds, just plug that into your underwriting. And maybe you can only afford to pay a little bit lower amount when you purchase the property because you know that it's going to cost you more throughout the duration of the rehab or whatever your plans are with the property. So just factor that in as a variable. But the big pro with this product is it is a fixed rate. Let's talk about some of the cons. All right, so the first big turnoff for me, and I know it's going to be a turnoff to a lot of you guys, but there are still some of you out there this will be applicable to, is that the investment property has to be held in your personal name. It can't be held by an LLC, a trust, sole proprietorship, whatever. It can't be held in any other entity except for your personal name. Now, they did tell me this was one of the big things that they're really trying to push on and get the barrier open on this one, because this really blocks a lot of professional investors, because most of us are holding property in an LLC. But there are a lot of use cases for holding in your personal name, especially if you're in your first 1 to 10 residential loans in your name. Typically, you can go up to 10 before you have to start getting creative. So if you're in this camp, this is still available to you. All right, the next big con, in my opinion, is this is only available for single family resident investment properties. So unfortunately, no duplexes, triplexes, or 4 units, but they did tell me right behind the personal name, the next thing they're looking to push the lever on is opening this up to your typical classification of residential property. So that means 1 to 4 units. So again, not a big fan, but if you're holding a single family in your personal name, you're still in the game here. All right, and some of the next factors that they're looking for are they do want you to have at least good credit or a 680 minimum credit score, but ideally 700 and up. But That's pretty close to what your standard HELOC is looking for anyway. And then for a debt to income ratio, they're looking at 50%. So that also is a little bit better than your standard HELOC as well. And if you're not familiar with those terms, check out this video where I break them down a little deeper, and I'm not going to cover that in specifics in this video. All right, in terms of value, this is a minimum of $20,000 and a maximum of $250,000, so 250 grand. So we got 20,000 to 250 grand lines that they are willing to open up. And you have to have owned the property for at least 90 days, right? You know, your typical seasoning period is 6 months to a year. So 90 days isn't too bad in this scenario. All right. And then the last con for me, and something that me and the broker talked a little bit about, is that you do actually have to take the full amount when you open the line of credit. So for example, if I open a $100,000 line of credit, you actually have to take that first withdrawal of $100,000. So typically I would fight this pretty hard, but what he told me is they really just want to see some initial activity. But I also talked to him about some options here, and he explained there's no prepayment penalty and no other constraints if you were to take this full amount when you open that line of credit and then pay it off the next day. Then you're in the same boat that you would be in any other scenario. You may have 1 day's worth of interest, but hey, if that's something you have to do to get through the gate here and everything else checks a box for you, it may not be the end of the world. So that's one thing you'll just want to make sure you're 100% confident in, that you can go ahead and take that full withdrawal on day 1 and then pay it all back off on day 2, or pay off the amount that you don't need on day 2 and leave the line that you need open, or until you're ready to use it. All right, and lastly, let's end with a little bit of good news. So there is no underwriting or upfront cost, application fee, etc. There's no cost associated with getting this thing opened up. So with that being said, it really doesn't hurt to call to at least see what your options are in your specific scenario. Even if you think you may be disqualified based on something else I've said, it wouldn't hurt to reach out and call and at least check in, establish that relationship, and try again, like I said, in a month or 2 from now when things may have changed. So if you guys do want to reach out, I'll go ahead and drop the link in the description below, but it is the One Brokerage, co-founded by David Green, and I'll drop some specific contacts in there as well to reach specifically out to the broker that I worked with and gave a heads up on that I'd be sharing this with some awesome HELOC enthusiasts out there who are ready to use this to start building wealth. And guys, once you get this account created and you haven't checked out my book already with what to do with the funds or how to invest with them intelligently, I'll drop my link to my book below. You can get that via paperback, hardcover, Audible, ebook. Try to make it as widely available as possible so that you guys can get the tools you need to make sure you know what to do on the front end rather than figuring it out when it's too late. But guys, if you got any value out of this video, or you know someone else who may be looking for a HELOC and isn't a subscriber yet, I would appreciate, as always, like on the video, share with someone else you know who could get value, or a subscribe if you haven't done so already. We talk all things HELOC, and as you can see, guys, I got my ear to the ground trying to keep you guys updated as soon as I see a pivot in the market and things start to open up. And I'll continue to look for other people out there who are allowing HELOCs on investment properties. I also have some connections for primary residence HELOCs that are nationwide lenders, so reach out to me if you want to know more about that. But guys, appreciate your time today. Drop a comment down below if there's anything I didn't answer or you have specific questions that you want to dig into. But with that, guys, I'm Tyler Wayrung, and we'll catch you